Hey everyone, Brian Bogner and Greg Towner here for the monthly market update here at Parallel Portfolios. Let's go ahead and get started. Greg, what are your views on the recent stock market movements?
Yeah, thank you, Brian. Well, normally we like to start off and take a quick look at the stock price trend, and so we're going to do that again. Continues to be a nice steady uptrend, believe it or not, with all the volatility both in the media as well as a little bit in the markets. We came off a low here last time we spoke, despite all the trade talk and the incidents with oil. Some of the things going on in the money markets and repo rates that the Feds had to work on. Despite all of that noise, the market's actually within just a tiny little bit of an all-time high as we speak.
It's interesting you say that, Greg, because the folks that I've talked to recently, whether it's in clients or just folks, trying to tell them that the S&P 500 is still near its all-time high, they look at you like, what are you talking about? I mean, the headlines the headlines are saying the opposite, and recession is about to happen, and we need to be selling right now and moving to cash. So it's interesting, yet here we are still in an uptrend.
Yeah, and as we look at the next chart, there actually is a lot happening underlying the market, though. For a long time, the market had been moving higher on some of the defensive areas, some of the higher quality. And for the last 6 years, that's been the case. Now, this chart here, the black line, as it's going up, it means more highly leveraged, lower quality companies are outperforming.
Right.
So typically, the type of companies that we like to own are higher quality, those that we can own forever. Right now in the last month, we've seen a shift towards the more cyclical areas, some of the lower quality, higher debt. The only time will tell if that's a short-term change or a longer-term shift, but those tend to be assets that you want to hold shorter term. You don't want to hold those through all market cycles. So we don't tend to play in that area as much. We prefer to own the higher quality with a longer term. But it has been an interesting month with some of those areas doing well in small cap and some other higher volatility things.
There's also been a lot of talk about the yield curve. I know it went negatively recently, but how has it changed over the past month?
Well, you said there's been a lot of talk, but there hasn't been nearly as much talk as there was last time when we spoke. Remember we showed that chart that showed the Google trends, how many times people were looking up the yield curve. It was through the roof. And right on cue, it went negative for just a few days. Well, now you hardly hear anybody talk about it. And why is that? Because it's back positive. So it's not that positive by a lot, but it's back positive. So everybody that was worried about that, I'm not saying you can ignore it now by any stretch,
right.
But it's just yet another thing that grabbed everybody's attention for a few days and on to the next thing.
Yeah. We talk a lot about the markets, a little bit on interest rates. Tell us about the economy.
Yeah, there's no question there's some mixed news coming out of the economy. That's why the Fed is, easing a little bit. That's why the president and the broader government is looking for ways to offer some stimulus. But last month we showed this surprise index. And so as this line is increasing, economic news is coming in better than expected. Last month it was not quite to zero, and now it's moved up above that. So economic news keeps coming in better than expected when measured broadly. And one area that's shown is the building permits and starts are at a new cycle high. There's a couple of things that I think are very important with this chart, Brian. First, despite the increase in population, this is a very long-term chart, we're nowhere near some of the old cycle highs where people were companies were overbuilding in tremendous amounts. Sometimes it feels like that when we all see new high rises going up everywhere. It feels like there's overbuilding, but we're nowhere near past episodes. And also, those light blue columns are recessions. And typically, we've seen the cycle, the permits and starts go down significantly before recessions. We're not seeing that yet. So there's a lot of talk about recessions. Everybody's saying, the next 6 months, 12 months, or the smarter ones don't give a time frame. They just say someday we'll have a recession. Well, of course we will. But we don't know when that will be. And frankly, even if we knew, that doesn't necessarily mean for sure we know how to play it differently in the stock market. They don't always tie together. But right now, economic news is a little mixed, but leaning more positive.
So as we said earlier, stocks continue to stay in their uptrend. There's been a recent shift to low quality, which actually, right, is a positive because that's showing that money's flowing into riskier assets, right, instead of the more defensive ones. The yield curve is turned back to positive. A lot being written out just recently on it, but now we've got a positive yield curve. And then the economy actually looks better than negative, and we're seeing some good economic numbers and things like that. So if you've got any questions at all, you know where to reach us. Give us a call, shoot us an email, and thanks so much for tuning in.